Well, this is, a Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Moti Roswal studios. I'm Prashant. Let me welcome in my colleagues, Reema and Nigel. Guys, hi. Good morning.
Hi, morning.
Hi, good morning. New series. Let's hope it brings better tidings because Wall Street close was pretty positive.
Well, that's right. And, I think the February, though the series was more or less flattish, there are a couple of bright spots in terms of the broader market outperformance, the banks, as well as the flows. But we'll talk about that, Prashant. Let's get straight to the action.
Absolutely. And I think it's a little better, just a little bit better compared to where we were yesterday, same time. But, yesterday, same time as well, we were down, 1%? We woke up to a 1% correction on the Nasdaq. But there were other problems, right? I mean, software stocks selling off. So it's across the board on all parameters, a little better. Now, let me just take you through what really happened. So that's the final close. S&P 500 up 3/4, Nasdaq up 1%. So basically recovering from the fall that we had the prior day. And the rebound, I mean, the tech sector giveth, the tech sector takes back as well. And it's been that cycle, right? I mean, a little bit of recovery, sell-off. I mean, the S&P, it's been 4 months now, if you think about it. And there's been so much violent dislocation across sectors in the US. But for all of it, the S&P has not gone anywhere for 4 months now. It's basically at around the similar kind of levels. So that's the final close. Dollar index went up a little bit, about 0.19% higher to about 90, just under 98 on the dollar. Gold and silver futures flat. I'm just sort of ticking through some of this stuff to tell you why, not what happened, but what did not happen, which is, big action like day before. So gold, silver, absolutely flat. The 10-year was unchanged, 4.03. Oil, little changed at about 71.47. Just in terms of single stocks, Meta announced a $100 billion deal with AMD. AMD stock was up about 8.5%. We'll talk more. PayPal was up 7%. There are reports that Stripe wants to buy it. And we'll see if the deal materializes or no, but there was that. Now, Anthropic's Claude, essentially, they announced that it's expanded its chatbot, the Claude chatbot, to build partnerships in the software and the services sector. And, the market kind of took that away to mean that maybe, this is working with the software services sector and not trying to replace them. So this is partnerships, and that is something which the market likes to hear. Now, we'll have to delve into it in terms of what this would really mean. Is this a change in direction or anything? I don't think so. There was the Anthropic event last night, and this came through from there. This was basically mentioned there, and the reveal happened in terms of these new chatbots, new functionalities, etc. happened. But the market latched on to the point of partnerships, and it kind of said that we want to... And this is what the Anthropic CEO told us in that interview with our colleague Shireen in Delhi when he was down for the AI summit, that we don't want to replace, we want to work with all these companies. But in any case, the market latched onto it last night. NVIDIA reports earnings tonight, that is, after markets close, after US markets close. But that's always an important bellwether for this entire AI trade. The software stocks, a cursory look, I think it's become important to take a look at this. And Infosys was flat. Wipro ADR was down about 2.8%. EPAM was down 1%. Accenture down 2%. Cognizant was absolutely flattish. Globant was up actually about 1.8% or so. So that's it's better than the handover at the same time this morning, but nothing very significant in that sense. Now, I'll just tie in the levels here. The Nifty, of course, remains within the channel, the downward sloping channel. Day before yesterday, we had a big pop. Yesterday, we had a big sell-off. So we are in that range. The midpoint of that range, the downward sloping channel, is 25,500. And I think, where we open, on what side of that 25,500 level we open, I think is important. And then where we head from here is very simple. 3 levels, 25,500, the midpoint. So that kind of becomes the pivot. The lower end of the channel is 25,230 because it's downward sloping. The numbers change a little bit. And the upper end is about 25,780. So we've been in this for the last 3-4 days now. And we need a break on either side. And then we can open up discussions on what happens. But so far, there have been big moves, but we've been ranged here. GIFT Nifty gives you a quick sense of how we're likely to start before we go anywhere else. It's up about 80 odd points. So reacting to slightly better cues from last night. Let's look at the positioning and how we are set up. Nigel has walked across to the wall. Nigel, over to you.
Well, Prashant, before I get to the positioning, one bright spot in February is that the FIs, they have turned buyers after a 4-month break. And they're also on course for its highest monthly inflow from the FIs after many, many months. And that chart should come up for you on the screen. What we're tracking right now is the February month, the FI flows are close to around 20,000 crores. This is data coming in from the NSDL. Now, February was a positive month for the Nifty, which was supported by banks. It was dragged down very, very aggressively by the tech index, though. But the biggest positive was that after a while, the broader markets actually outperformed. And that's the reason your portfolio will be feeling a little bit better. Now, March series has been a positive series more often than not, with the Nifty delivering, positive returns 80% of the times over the last decade or so. So the bulls will want a positive series in the month of March, but keep in mind that seasonality factor will play out in the first part of March. That is, there'll be some kind of rejig that takes place, and that's where parts of the broader market will come under pressure. So just keep that in mind. But on the whole, March could be a positive series. Rollovers as well a little lower as the Nifty as well as for the markets on the whole. In comparison to, the 3 series average, both for the Nifty as well as the market-wide positions, rollovers were a little bit lower. And that explains why the Nifty futures open interest, it's a little lower in comparison to what we saw at the start of the February series. So we're starting the series a little bit lighter than earlier. So, that's actually not such a bad thing. The FI short positioning at the start of March, well, that's the lowest we have seen in percentage terms all the way since July 2025. So yes, they're short with 79% of the positioning on the short side, but that's much lower in comparison to the earlier series, as you can see. Clients, they remain net long, but they're lighter in comparison to the start of the earlier series as well. The client long positions is what we're looking at. The Nifty, it appears that we are in this broad 1,000-point band, 25,000 on the downside, 26,000 on the upside. But in terms of the near levels, I'm looking at the 20-day. It comes in at around 25,600. That's the important mark you want to, look at. And on the downside, you do on this level, that's a 200 EMA, to get broken very, very decisively. The Nifty Bank will have to continue its good form, as we have seen in the February series itself. And the bulls will be banking on the Nifty Bank to take us over the line, in terms of continuing its good form. However, the Nifty IT index, that's going to be very important. 22% down in a single month. The open interest has swelled up big time. If you compare it with what we saw earlier, open interest is up between 30 to around 40%. And you have the stocks that are down 25 to around 35%. Something's got to give. Maybe there is some room on the downside, but I think the bias will be on the upside from there on. Just a near-term technical bounce. The trend is still very much low, but otherwise, I don't think you should rule out a technical bounce on the Nifty IT index from those oversold levels.
Thank you very much. Yesterday, the flows action was also interesting. While the sensex was down more than 1,000 points, Nifty nearly 300 points. If you look at the cash market flows, the FI sold only 100 crores, while the DIIs bought more than 3,000 crore in the cash market. But yet we had the market sinking. So where did the big selling come from?
So, Rima, just one point. The reason why I didn't refer to that particular number is because it's sometimes you have the expiry-related factor, right? Because the position between futures as well as cash. But as you said, yes, I mean, for the kind of sell-off that we saw, we didn't see any big sell number,
big selling,
which is good. And the NSDL data says the FIs have turned buyers. So, okay, we want them back. They're back for now.
All right, let's see how the March series panned out. The last 4 March series, the Nifty has clocked in positive returns. Let's get to the equity calls then. It's Sayan Mukherjee of Nomura who says the Indian market has continued to underperform global peers. He says the Nifty is down 3% in dollar terms in 2026 so far, and the drawdown in Nifty is largely driven by IT services, which is down 15%. He says AI-related disruptions have raised market concerns on deflationary pressures on Indian IT services company, and they are not that bearish on the outlook and think the concerns are premature and overdone. This is all on IT. He expects IT companies to realign and gain from new business opportunities with these assumptions. He thinks the risk-reward is favorable and retains his positive view. They're also positive on financial, cement, consumer discretionary, auto ancillaries, telecom, pharmaceutical, so broadly the domestic play, and they maintain their December 2026 Nifty target of 29,300. So that's a good 4,000 points upside from where the Nifty closed yesterday, which was about 25,400.